Hey folks, welcome to yet another episode of Business Redifined, your weekly most comprehensive look at the world of business, finance, and economics. Now, this market has come a long way with the real estate investment trust. The initial proposition was the aspect of illiquidity of real estate as an asset class. Over the time, there has been significant evolution, and we are currently having a dollar-denominated investment REIT in the market. And we're privileged to have the Chief Executive Officer of Two Rivers International Financial and Innovation Center, which is a special economic zone, to help us make sense of where the company is going with this offer in the market and the capital raising exercise. Brendan Barthy, welcome on set.
Thank you. It's a pleasure, Julian.
It's an absolute pleasure to sit down with you after a long time trying to chase to get an appointment here. So maybe for those who might not have context, tell us about the REIT and what you're targeting and what the deployment will look like.
Thank you. So let me start by introducing myself as the CEO for, as you mentioned, Two Rivers International Finance and Innovation Center, Special Economic Zone. And the acronym we use is Trific. Yes. So Trific Special Economic Zone. And what we're doing is we're bringing our North Tower, which is our first asset, to the market through a US dollar IREIT. It's a US dollar IREIT because we raise all our rents in dollars. And so this is the instrument we're able to bring to the Nairobi Securities Exchange, where it will be listed.
All right. And maybe let's take a step back. There are those who might not be familiar with REITs as an asset class. We've tried to have a lot of conversation on this, but many times I still get questions. What is a REIT, and particularly an IREIT for this matter?
So a REIT is a real investment trust that is traded on different exchanges like stock exchange. And an income REIT is one where you're getting the rental incomes come in and you receive a dividend. Our dividend distribution will be twice a year. Our yield is 8%, and it's backed by predictable US dollar rental income. Yeah.
All right.
And then you say, yeah, I hear you, Julians, because people keep asking about it and asking, is this a good investment class, etc. And we're trying to be part of the group that comes to the market and helps with education on the same. The thing about an income REIT is that it's something that you own as a pool of investors, okay? It's like buying shares in a company. So you're buying shares in a building. It could be a commercial building, it could be residential buildings. In Kenya, we have hostels, it could be warehousing, etc. So you're actually taking a lesser risk because you're buying a share in the building with like-minded other investors. And you yourself don't have to manage it on a day-to-day basis. You're just waiting for the dividend yield to come to you like you would expect if you're investing in shares in a listed company, a listed corporation. And as you know, at the Nairobi Securities, they're split into different sectors. So this one is just real estate listed. And the good thing about it, it's tangible. You can go and visit and see the actual property. See, you know, it exists. You can see the bricks and mortar are there. So if you're making an investment, it's also good to see, is this real? Somebody is professionally managing it. So in our case, we have Brawl as the property manager. The way that the REIT is governed in Kenya, or the REITs are governed in Kenya, is the governance is very stringent. So in our case, we have a trustee of the REIT, which is NCBA Bank. We have the REIT manager, which is Nabo Capital. We have placement agents to support us in this fundraise, which is KCB Investment Bank and AIB Access. Then I've mentioned Brawl, and then of course you have all your independent auditors, etc., etc. So the governance structures are stringent and are well in place, and we as Trific are the sponsor for this particular REIT.
I saw the anticipated yield, and I thought 8% hard currency denominated, quite aggressive. I mean, granted, you have the backing of rental income, which is in dollar, but considering the prevailing macros and some of the softness, if I could call it, we have seen in the real estate space, how do you ensure then you have a stable flow to be able to realize this yield?
Okay, so I mentioned that we are a special economic zone. So that in and of itself puts us in a special class. Special economic zones are governed by the Special Economic Zone Authority. We as Trific are the first and currently the only privately owned, bespoke to business services special economic zone in Kenya. The clients that we have attracted into our zone are blue chip tenants who are exporting their services to the rest of the world. They're exporting these services and getting their payments in US dollars. So it's a total dollarized economy. Even the license fee that we pay to SEZ, we pay them in dollars. They charge you in dollars. So that is how we operate in a special economic zone. So the blue chip tenants have signed long-term commercial leases. They're very bullish about this economy and the services they're offering. They're in different sectors that are growing in this particular economy. And I'll take a sector like the BPO sector. If you actually read in the Business Daily, even today, there's a page about the BPO sector in Kenya and how it's growing. And it's really due to our English proficiency, our great talent. And so the companies that are coming to be domiciled, we are really lucky to have the #1 BPO in the world, Teleperformance, known as TP, domiciled at Trific SEZ. They are able to attract clients into this market, offer them services, and the potential they're seeing, the way they're scaling up is actually phenomenal. It's at a tremendous rate. And I think perhaps we've underestimated the services sector in Kenya. And perhaps we need to pay more attention to it because it has definite potential for growth. So BPOs is just one of the sectors that we have in our stable, for want of another words, our members. And we have several sectors: fintech, shared services, centers of excellence, corporate headquarters, etc., etc. And all of them blue chip tenants. They've signed their leases. There's a rental escalation clause of 3.5% per annum. So even that 8% yield, actually in this particular REIT, it won't just be the property that will increase, we believe, in value, but also your rental incomes. So hence the reason we're very bullish. We're truly bullish because this is the first asset. We hope this to be a growing REIT as we go forward, Julian.
Fantastic. Something you've touched on, which I think is critically important, and the moment I saw the offer, that just jumped at me. How critical was the designation as an SEZ critical to the structuring of this REIT?
I would say it was foundational. The strategic incentives that you're able to get when you're within a special economic zone definitely allow you to optimize your business. And when you see the different businesses that are operating in our special economic zone, so far we have 30 of them, the strategic incentives are important. And what we do as Trific, we are, I would call our own one-stop shop. We support all of these entities to get their licensing, to get set up, plug-and-play offices fully onboarded. So we take away that pain that is definitely there when your entity is looking to set up, not just in Kenya, but in Africa. So we've helped to remove that pain point or any frictions there may be. We also have a great regulator. And I know people would say, really, Brenda? But we do. We have a great regulator, good support from the national government on what we're trying to do. And so we've made this process as painless as possible for our members. So I would say special economic zone is foundational to what we're doing and what we're bringing to the market. Yeah.
Tell me about the deployment. I know there is the North Tower, which is part of the consideration, and also another development within the pipeline. Just give us more context into that.
So the North Tower, first let me give you a bit of background of what we're bringing to the market as the North Tower. It's an 8-floor building, 174,000 square feet, grade A, green edge certified, and also green according to the CMA rules. So the fundraise we're doing, or we're going to the market with a REIT, the monies that we will get from this REIT, we will use to fully purchase this North Tower and take it and give it to the investors in the REIT. And then we'll take the monies that we get, anything left afterwards, to go and develop a new tower, which is called the Vantage Tower. It will be a 15-floor tower, so double the size of what we have on offer now. We've already started the foundation and piling works for that. In the meantime, we also have another building that is now fully SEZ approved, which is the Victoria Tower, again within the Two Rivers ecosystem, and we're already attracting clients into the Victoria building. So there's definitely a plan of how we're bringing people into our different buildings. It's purposeful. It's we have a master plan. Our SEZ is 64 acres. We have approval to construct 800,000 square meters of grade A commercial space. And so we're following a master plan and building very purposefully and deliberately. And so the proceeds from this REIT will go to the next tower, the Vantage Tower. And we have all the models in place, all the architectural drawings, everything approved. We're now ready to go to the ground.
How do you mitigate against development risk, whether it's delays or development cost escalation, which normally comes into play whenever we have consideration of real estate?
In our case, as I said, we earn everything in dollars. This will be a dollar asset, dollarized. We mitigate as best as we can. Our actual building process, even for the new tower, we'll be using new technology, and we shouldn't be building more than for 15 months. And so the contractors already have in place what it will cost to do that. So those escalations, I think, have already been taken into place. So I don't see that as a major risk for ourselves. We do it hand in hand, with very qualified and professional architects, contractors, etc. So all of that has been very well looked into. Yeah.
Well, I don't know whether it was only me, but I thought the appeal of this instrument coming to market was largely institutional focused. When I read through, I think it's both institutional and retail.
Yes. So, one of your earlier questions was about people don't really know about REITs. You need to do more education. So for sure, there is a focus on institutional, but we decided to actually list it on the stock exchange, the Nairobi Securities Exchange, and also go out to retail, because that would be part of what we're doing to bring a cross-spectrum of investors into this REIT. And the more you do that, the more Kenyans will get involved and understand that this is an investable instrument. So true, we could have kept it restricted to institutional, but I think it's great to be able to offer it to the retail, and including somebody like you, Julians, to allow everybody to say, I can own a piece of real estate in the UN diplomatic blue zone, which is where we're located, in a grade A green certified commercial building with blue chip tenants who are definitely very ambitious and doing very well. I mean, it's just part of a great success story. So we hope as many retail investors take up this opportunity.
Is it, do you have like quarters which are saying retail, if they bumped up to this point, will be good, then 80% is institutional, or is just open?
We've put it, it's open, and we'll decide that when we see what comes to the table. I'll just, state here that it's $1 is one share. But the minimum that you can apply for is 1,000 shares. So it's $1,000 is your entry point into this great instrument.
Does the recurrent challenge we have around illiquidity of the secondary market bother you as you think about that?
So good question. I wouldn't say it bothers me, but it has bothered many people.
Myself included.
Yourself included.
Yes.
So as we were developing this REIT, we went to the market and we asked, what are the pain points that people have when they look at REITs? And that was the liquidity problem. So we've actually put in an instrument to help support that. We're working with AIB Access on liquidity support, so that we should stabilize this REIT, at least for the initial years, and allow it to definitely be tradable. And we needed to do that because we were going out to also support, attract retail investors. Yeah. So we don't want them to be disappointed when they come into this investment instrument and then find that they can't trade it. So we've looked at all of that, and that support has been put in place.
I see. Interesting. I wonder, Brenda, when you look at the evolution of REITs in this market, I remember when we were starting REITs in Kenya, and it was such a niched, if I could say, product, which very few of us interacted with. Increasingly, it is becoming, if I could say, mainstreamed. How do you assess how far we've come? What do you see as the journey ahead?
So, you know, this week I read that we started the journey at the same time as South Africa.
Yeah.
And we haven't done as well as we could. Let me put it that way. They've gone ahead tenfold to what we've done. So we need to do more. But I really think I admire what the Nairobi Securities is currently doing. They're really trying to support different investment classes come to the market. So all I'd say is we're going to do our part. We've allowed it to go to retail. We're helping with education. You are also doing your part. And I hope that if we put in all the mechanics that we've, that have caused friction or pain points, like you said, the liquidity support, etc. Once we have all of that in play, hopefully it will illustrate to the market that this is an instrument that you can afford to get involved in. So it's a journey. Where do I see the future? Very bright. Because I think you're starting to see the REITs as being successful. I think more and more people understand what they're about, and it's now becoming, it's accessible, and it's something that Kenyans can try and get involved in. So I'm very positive, optimistic about the future, and we're going to play our part and hold us accountable to that too.
By all means. But I'm sure you did some book building, even as you are structuring the REIT. What sort of sounding did you get from the investment community?
It's been very, very encouraging. And so we're very pleased with what we've received from the investment community. And as I said, when we went to the market, they did explain what sort of challenges they've experienced with REITs. But I have to say it's very encouraging. So we're very optimistic. Okay. Yes.
From a policy and regulatory standpoint, we've seen a lot of effort to try and catalyze uptake of real estate investment trusts, whether it is amendments around value-added tax. Recently in the income tax amendment bill, we're seeing also another proposal in the finance bill. As you look at this, what do you think would help to further push this, especially to we retail investors who might be looking at this asset class and thinking it's locked out for us? But actually there's been a lot of effort to make it attractive to us. What would be some of your thoughts?
I think it's about understanding, education, and all the things that have been put in place, even if it's via the income tax bill, the upcoming finance bill, etc. All of these are helping to encourage REITs to be successful. But do people really understand what this means? So I think sometimes we have to just break it down into very understandable sound bites so that people understand what it is. And I know it sounds, oh, that's very laborious, but I think if all of us play our part and really educate people about, a REIT, it's like investing in shares, this is how you do it, this is what will happen, you won't pay tax like this and like that. I think it will be very encouraging. I encourage stockbrokers also to talk to all of their clients and to encourage them to diversify into this space, because the journey that we've come thus far illustrates that steps have been made to now make REITs more successful. So we've learned from the pain points in the past, but I think now a lot, all stakeholders have come to support this, including, as you say, the government. So, I think let's keep going on the journey. I'm encouraged because, as I said to you, this is the North Tower is the first building we're bringing to our REIT, and we hope to bring then the next tower to the REIT. So we hope to see continuous improvement, and this will be a growing REIT. And as we bring more assets into our REIT, we hope that even the REITs evolve into being more investable instruments. Yeah.
But I know you told me you have a meeting coming up, so we need to get winding this down. Tell me about the key dates we're looking at as far as this issuance goes, and really what would be your parting shot to the market and investment community around the state of the capital markets? I mean, we've had a lot of activity in the recent past, whether it's corporate debt and many other issuances. But how do you see the market right now?
I think the market is extremely vibrant. Hats off to the Nairobi Securities Exchange and everybody who's involved in making this happen. For us, this particular REIT, we opened on May 13th. We closed June 12th. We'll allot the shares hopefully by June 16th, and then we'll proceed to to go to list on the exchange the following week. What I'd like to say is to investors is it's $1,000. Give it a try. It's a US dollar-based income instrument. Dividend yield 8%, payable twice a year. It's predictable. It's a great asset class to invest in. Yeah. And try a REIT. Try a REIT. And I think you'll be very happy. I don't want to say in comparison to other instruments, that can get me into trouble. But all I'm trying to say is I'm advocating for more and more Kenyans to try this investment class. And I think they'll be very pleasantly surprised.
What about those who are still frozen in the brick and mortar of real estate?
Well, you know what? That comes with a lot of challenges as well. And imagine this one, as I said, you're not managing it, you're not looking for a tenant, you're not checking whether the contractor has gone to site to build. It's all been done for you. So again, I'm not discouraging that because I think there's an emotional attachment
sentimental
to owning something. And I think we all have that. So let's not go there. But I'm thinking that instead of continuously maybe just looking at investing in land and apartments and housing, is perhaps to use, if you have that money, to consider putting some of it into a REIT and see how it performs. Again, it's education. And hopefully have that emotional attachment to a building that you can see and say, I actually own a bit of that and I'm getting a good yield, I'm getting a return, I'm getting it in dollars, and I'm happy.
We've been having a conversation with Brenda Mbathi from Trific, Two Rivers International Financial and Innovation Center, speaking about the latest REIT in the market, dollar denominated. And that has been a huge part of our conversation because how exactly do you structure it? Whom are you targeting in this market? Why does it make investment sense? Not just for the traditional institutional investors, but also retail investors. And that is you and I. And that's why we have this platform, to create visibility and awareness on what's happening in the capital markets. So keep it Business Redefined for all the latest as and when it happens.